right, ladies and gentlemen, welcome back to the Passive Cash Flow Podcast. I'm your host, AaronFragnito. I hope you've been enjoying our episodes here. Of course, we come out with a new podcast episode every single Friday morning. Of course, if you are following us, please click that like button, click that subscribe button on YouTube and the other, whatever platform you're listening to us on, and leave us a review. We'd love to hear your feedback. We'd love to understand what you're looking to hear more about, suggestions on topics and guests and so on here at the Passive Cash Flow Podcast. So today we have a very interesting guest. We have Coach Peacock, also known as Doug Peacock, author, investment advisor here, and wealth creator for many people. And I wanted to have Doug on the show here because he's not a hedge fund, he's not a family office. He helps people build wealth in many different ways through infinite banking, which we're going to get into today, and 5 different steps as well. And Doug, why don't you introduce yourself?
Yeah, thanks, Aaron. I was a high school football coach for 38 years. My retirement out of education didn't go quite like I thought it was going to, and I always thought that things, your assets always went up and to the right, but lo and behold, they don't. So, I learned some things, and then I found out, talked to some guys about some infinite banking, and really learned that there was an entire group of people not being serviced, and it was the teachers and the police officers and the nurses and the medium income people, if you will. Mm-hmm. We're not qualified investors. They're none of that. In fact, they're quite frankly very frustrated with money because they can't seem to get ahead. And so the more I learned about this, the more I loved it. Well, then I found out we could use money in 2 places at the same time. Well, and I'm going, this has a chance. Mm-hmm. So I literally started showing my former football players how to get out of student loan debt, because they went to college, they had student loan, and the next thing you know, they're paying, and a huge portion of their monthly budget, to whomever, Sally Mae or whatever, they can't. You can't win that way. They're working their butts off all week, and they bring home a paycheck, and it's running right out the back door. It's not even stopping. Mm-hmm. And it became very, very satisfying to me as I was still coaching people how money worked for the little guy, if you will. Right. And it's I found out as I've expanded on this, it works in a lot of different areas. Yeah. Particularly with real estate. So,
at People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. Yeah, no, I love it. And, I've heard of infinite banking before. We definitely want to get into that and your 5 steps as well that you suggest to people. And, it's I also really like how you help the common everyday man, a person looking to build their wealth. And I do find that a lot, I'm in the space of wealth creation, fundraising, high net worth individuals. There's a kind of like, I don't know what to call it exactly, maybe a snootiness, you could say, or something like that in the super high end world of wealth. And it's really nice to help people that are not yet wealthy become wealthy, and there's just, I love helping millionaires make more millions, but boy, the satisfaction of helping a single parent, or a hardworking business owner, or just someone that's finally been able to save up enough capital to invest in real estate wisely and safely. That's such a cool feeling, helping the everyday person invest. And that's a really fun place to be for me. And that's why we started People's Capital Group. And that's one of the reasons I felt like you'd be a great match here for the podcast. And on top of that, I actually recently am teaching a college course that I wrote. Rowan University asked me to write and teach a course called Real Estate Entrepreneurship. And it's a lot of fun. I've never taught the college course before. I've never taught any type of schooling before. So really learning how to be a college professor here, right in the courses I go along and so on. But it is just phenomenal to get back to the students. The first thing I taught, first book I signed was Rich Dad, Poor Dad.
Yep.
And the first thing I taught was, hey, your student debt is bad debt. There's good debt and bad debt. Now, of course, it's going to get you a college degree. It's going to give you the opportunity to build your career. So it's not terrible. It's not like buying a sports car, but it's, there's good debt and bad debt. And be aware of how dangerous bad debt is with your student loans there. So just, the first topic I hit them with was, hey, the debt you're taking on is bad. Good. Welcome to college.
Yeah. It can be a nightmare. And I will tell you, because as a teacher for 38 years, I will tell you that make sure where you want to go requires that degree.
Mm-hmm, mm-hmm. Absolutely.
Okay. Do not go out here and get your degree in, Canadian studies or something. There's very few places that's usable.
Mm-hmm, mm-hmm. Absolutely.
And there are a lot of people who will train you.
Mm-hmm.
So anyway, that's a whole different side. But yes, student loan debt will destroy your budget.
Oh yeah, absolutely.
I see it every day.
I mean, some of the liberal arts degrees you see now, I don't know, if my kid comes to me and wants some crazy, I won't mention any particular types of degrees, but I think we all know what we're talking about. And I'm like, nope, not paying for that. You become a plumber, become an HVAC tech. That's what we really need. Holy mackerel. When my plumbing backs up or I have an electrical problem, first of all, those guys are so busy. Any good professional that works with their hands is so busy. And they seem to be doing so well if they understand how to run a business a little bit. So learning a skill is so phenomenal. We really have such a need for it. And I hope that the encouragement to go to vocational schooling is growing in our society, because it always annoyed me, like, oh, you're a loser if you don't go to college. Like, actually, I have a lot of friends that went to college and they're not earning what my friends who didn't go to college, who got electrical degrees. Now they're electricians. They're making twice what the guy, working at the bank is doing, but he has a 4-year degree. It's just really incredible. How society tells us we're not successful if we don't go to college. And man, I went to college. I had the student loans. I'm telling you, I don't apply anything I learned in college to what I actually do today. It's all been learned through the craft, through the trade itself. So that's what
agree. Agree 1,000%. 2 stories. It's just that, again, how many people do you know working today are actually using their degree? Because there's a lot of them that aren't even in that field anymore. Right. The other thing is, you were talking about plumbers, and I had a kid who loved plumbing, but he didn't have a family that plumbed or any of that. He just liked it. Yeah. Next thing I know, he owns his own business, and now he's certified to teach it through the state. So he has both ends of this going crazy. Absolutely changed his life. All right. And was, as far as I know, never spent a day on a college campus except to work probably. But chase what you want, it's not a job when you love what you do.
Yeah, and if you're not great at schooling, don't go to college. I also met a lot of kids in college that shouldn't have been there, and just really wasting their time, and whoever's money was paying for it, which is usually the government's money. It's really interesting. And but anyway, I digress. Let's move forward here into one of your first topics, known as infinite banking, I believe.
Sure.
So, what is infinite banking?
It's just a place where it allows us to leverage money that you have stored away, so to collateralize it for other uses, and it continues to grow just like you didn't touch it, just like a collateralized loan. Okay. So the point being is I can use that money now in 2 places: pay down student loan as well as save for the house, because that pile of money is going to continue to grow and I can't stop it. Okay. In fact, it's going to be guaranteed to grow more every year. So the longer this thing cooks, the better it gets. Then eventually it's going to overtake whatever you're putting into it.
Right.
Now, I don't care what that number is. That part is just math. But understand that there's a lot of wealth that's not just math. And one of the lessons I flunked miserably was, if I take $30,000 and I borrow it from the bank for 5 years at 6%, well, I take $30,000, I put it in a bank for 6% for 5 years. That's the interest charges on those two loans are exactly the same. No, it's not. And if you don't understand that, then let's back way up.
Right.
Because I can pay simple interest on one, and the other one I can earn compound interest. And guys, that's $4,200 every time I do that.
Right.
So now the question isn't whether I want to do that. It's how many times can I do that? Because I just made money. And we don't understand those things. And as a coach, I break it down so a football coach can understand it. Don't make this hard.
Right.
It doesn't have to be confusing. I'm not going to sit here and tell you, well, this is complicated and you can't understand it. If somebody tells you that and they're asking you for money, run. You just gave them permission to lose all your money.
Right.
And don't do that. In fact, if they can't tell you what that account's going to be worth in 5 years or 50 years,
right.
Wrong coach. Sorry.
No, absolutely. I always try to be so transparent when talking to people about investing. And I've also talked to other people about investing, and they'll be like, I'll ask them a question or something like, oh, I don't feel, I don't want to answer that or something. I'll be like, what, really? And I'm not going to invest with you. It's interesting. But anyway, so so you said something that caught my interest there. Also, 6% with a bank. I saw 3%.
Those are just numbers because that's my lesson, and I knew what the numbers were.
Okay. I was going to say, can you tell us what bank is offering that?
No, that was a prior lesson that the teacher had already knew the numbers on and didn't have to figure them out as he went. So
got it.
Got to remember, I was a PE major, man. Math.
Yeah. And also, I would also note, when you take out a loan, the first payments you're making are really just paying interest, depending on what type of loan it is and how it's structured. But generally, at least for a mortgage and real estate, the first 15 years of payments are primarily going to interest. The first 5 years are terrible. It's like all interest, like 80% interest. And it's
So I'm going to jump into another world kind of, because I do not teach people investing. Okay. I want to get you where you do what you do, because I really think that's wonderful. Getting people into I think it's a great asset. The problem is we don't have any money to do it. So I will tell you that what I use is life insurance. Now, please understand. I'm going to tell you the same thing. If your life insurance guy starts talking about investments and rate of return, wrong coach, run. Okay.
All right.
I will tell you the reason I use life insurance is because it's guaranteed to grow, and it's 100% going to pay out. You're going to die.
Right.
I don't know when. But in case you haven't bought all the houses that you want yet, this is going to help you complete that. And you're gone from the planet. So I will tell you that you do need help. You do need the right coach, but you got to get a properly designed dividend paying whole life insurance company with a mutual company. Okay. Several things there. It's designed for minimum death benefit, but maximum cash value. Now, that's exactly the opposite of what you're going to hear from a financial professional. Okay?
Well, it depends on the professional, right?
Do what you want. I ain't touching that one. It's not my experience. How's that? They're all going to come in with a needs analysis, and all of a sudden you need $7 million of insurance. Oh, it's going to cost you this much. Now, all of a sudden, it's how much do you want to pay? No, that's selling insurance. No, I want to use insurance as a tool to get me to buy houses. Right. That's the difference. And I want to make sure that you have the money there. Guaranteed to grow. It's going to be there. It will not, you're not, I don't care what the market does. Okay. you can get on that roller coaster. If you're looking for a Wall Street ride, I'm not your guy. Okay. If you're looking to pay all the taxes that you can, I guarantee you I'm not your guy. I believe we pay our taxes, our income taxes one time, and then we erase it from the tax books forever. And guys, everything we do, there's 6 IRS codes that protect tax exempt cash flows.
Okay.
Why don't we know those? Well, so here's the deal. Guess what I use? I mean, I didn't, please understand. I was a football coach.
Right.
I didn't know this.
Yeah.
But if I can have a retirement income set up or a way to buy properties where I can take a cash flow from it and still keep it tax exempt.
Right.
Oh my gosh. If you understand that, I just changed your life. All right. Now I understand you don't know me that well, so that's probably not going to happen. But look into it. There's this thing out there. I mean, I'm old enough to remember when there was no Google. Okay. So do that. But you also got to understand you're going to get both sides, just like everything. Okay. But if the right coach, you'll understand what's going on with your money, and it's not that hard. Don't make it hard. If they're making it hard, it's the wrong coach.
So let's use real world examples here, because people learn best when they can just put themselves into an example here. Now, are we talking about high cash value life insurance policies? Is that another name for this tool?
There's people that use that term, and the bottom line is, yes, it's high cash value, but high cash value to me isn't what high cash value is to you or the next guy. Right. But that is the term, or overfunded life insurance. Yeah, and I don't like that term either. I think it's got to be properly designed. Yes, where you're going to have a minimum benefit, okay, and a maximum cash value.
Yeah, absolutely. So the life insurance policy is kind of used as an investment tool rather. I mean, it's also used for death benefit, but no, I love this idea. I've actually just recently did a podcast episode about this, and I guess so my question is, so is infinite banking different though? Isn't that a different strategy, what they call infinite banking, or is that the same idea here?
I think it's a Swiss Army knife. What do you want to use it for?
Right.
Do you want to use it to get out of student loan debt? I can show you easily how to do that. Do you want to just do it just to see if it works to pay your quarterly taxes? All right. That's one of the first steps I took, because coming from the education world, I got into, oh, excuse me, I owe you more in taxes. Oh, I'm going to pay them every 3 months. Excuse me. Where did that come? I mean, so I'm telling you where I came from.
Right. Right.
And it doesn't have to be hard, but but infinite banking allows you to use that money for whatever you want to use it for. Okay.
Absolutely. Yeah.
And it's going to be safe. It's going to grow. It's protected. Creditor predator proof in most states. You have to look that up, but it's very, very nice to have a pile of money that nobody can get to. And it's 1-800 send me some money, because I just found a property I want to buy. Yeah. And it's bang, bang, bang.
So walk me through how this would actually work. Let's say, hey, Coach Peacock, I like what we're talking about here. How much money do I need to put towards this every month or so? And, when can I expect to be able to start being to pull back out of the policy? Sure.
That depends on your budget. Okay. I will tell you that I have clients who put $10,000 a month into this. That they are not football coaches, by the way. Okay. All right. I also have single moms putting $157 into this. Now, some people will argue that's not even worth it. I'm arguing that her $157 is more important than his 10 grand. She needs that money. Yeah. Now, to answer your question, as far as needs, you're going to have availability of some of that money in 30 days. Not 3 to 5 years like everybody thinks whole life insurance is. That stuff's out there. Okay. Wrong guy. If you're talking to that guy, wrong guy. Yeah. Okay.
Yeah.
But this money, now, how much is available? Because that's always the next question. Well, I want to know, how much can I get? Well, that depends on your gender, because guys do stupid stuff. So we pay more for insurance. It also depends on your age. It also depends on your health classification. So there's a bunch of factors into that, because there is a cost of insurance to this that I cannot get around. Okay. And you don't want to get around it. That's your protection.
Right.
I mean, so that's truly the first place I start, and you're going to use it. It's just a matter of time. Okay. So don't think it's not important. It is, but I'm going to treat that cash value, if you will, as a warehouse,
right,
where I can store that money. Okay. Now then, it's not going to, I know real estate investors want to hear, 15, 18% return. Well, that's not going to do that. All right. Yours may be higher. I don't know what your group looks at anymore. I mean, I don't understand real estate, so I don't invest there. Okay. But I will also tell you that I have a lot of guys who do, and they love it.
Sure.
But this warehouse is going to earn 4%-ish. All right. Depending on a lot of others. Again, cost of insurance, your age, all of those things. Yeah. Still allow into it. The nice part is, though, that warehouse is available. I can use that money for what no P&L statements, no loans, no credit scores, none of that. It's 1-800s. And they'll ask you two questions: how much do you want, and where do you want us to send it? And if you're smart enough to set up ACH to your bank account, 2-3 days, that money's in your account. Try doing that at some other business or line of credit or whatever. Right. You don't have that. It's safe. It's predictable. It's accessible. It's guaranteed to grow. It's leverageable. All right. And it's going to grow because of that leverage, because of that collateralization. It's going to grow even when I pull money from the insurance company, not my money, but I'm going to borrow the insurance company's money. So mine continues to grow. You talk about uninterrupted compound interest. Go study that for just a little bit, because everything that we do, we think we're getting compound interest. We're not. Right. Taxes, market volatility, use, fees, all of those come out of that and kill your compound interest. Well, what if none of that comes out? What if it's guaranteed to grow and there's nothing you can stop it from growing? Shucks, I'm in. Right. All right. I don't care what that amount is. It's just a matter of, so now instead of having a life insurance bill I've got to pay, I've got a life insurance warehouse that I can fund to buy something I want to buy down the road. Yeah. Yeah. Completely different mindset. It is. And eventually over time, if you fund it strong enough, you don't even have to keep paying that premium, right? Over time, the premium can kind of be covered by the policy growth itself. Is that correct? Oh, absolutely. Yeah. But let me tell you something, 20 years out, and let's say you're putting $1,000 a month in here. Sure. Okay. Or you got it. So now you're paying 12 grand a year. Yeah. Same difference, right? But all of a sudden you put that money in, and that policy is going to return you 15,000 that year. Interesting. Got it? Yeah. I like that. I mean, it don't take a 4-year degree to get this. Yeah, that makes sense. Now all of a sudden, so I always question, yes, you do that? Absolutely. Okay, and I will tell you, we're going to try to get that thing to fund itself as quickly as possible. Right. But the truth is, why would you ever want to stop funding it if it's returning more money than you put in? Yeah, absolutely. That makes sense. Yeah. And if you're able to, borrow the money back out against it, essentially interest free, because the growth of the policy covers the cost of borrowing that money back out. Is that also what tends to happen as well? Well, I will teach you that you're going to earn compound interest on that money. You cannot stop that. Right. The only way to do it is cancel the policy or let it lapse. Stop. I quit. I'm done. And I will tell you, they're not microwaves. They are crock pots. Okay. It takes a while.
Yeah.
Depending on a while, depends on all those other factors we've already talked about.
Sure.
But if it's 7 years,
Mhm.
where are you going to be in 7 years? Most people don't even know that. You know,
Could be on Mars.
All of a sudden, what if you're making more money in year 8 forever, so you leave the planet, than you put into it? How many times am I going to do that? You know, in fact, I'm going to design. It's got to be a properly designed policy, and I don't even want to get into that today because that's in the weeds, and it's you got to have the right coach to do that.
Yeah, that would be more depending on your specific situation, how many children you have, that your age, you know, your expenses in life, you know, right, your desired retirement age, your income. So of course we'd all have a like specific financial plan for us in that case. But no, I really like this policy, you know, as you call it, the infinite banking option here, because it really does make a lot of sense. And it's funny because I was shopping around for a life insurance policy a little while ago, and I was about to do the regular old whole life policy, and I just never pulled the trigger on it because it didn't do it for me. You know, the idea of kind of socking away this money for 40 years and like maybe by year 20, you can kind of get back your investment. You know, I'm like, I don't know. Why don't I just do a term life and put the rest in the Roth IRA and let it grow tax free there, you know, and that's another retirement strategy as well. So I really like this infinite banking thing. It makes a lot of sense. You know, you get the death policy, your investment grows with compound interest. You can borrow back against it, essentially interest free, and then put that in capital into another asset that produces income and build your wealth exponentially while still having that death policy there, just in case something happens on your way to your real estate.
Right. And I think, you know, that's we're into those 5 steps now.
Okay, good.
We talked about earlier, because number 1 is the protection. Okay. And you need that. You know, number 2 is the warehouse. All right. Have a place. What if you could spend your 401k money?
Well, it's probably good I can't, right? It's probably good I can't. Yeah.
Without taking a loan, without paying the government, okay.
Just don't tell my wife that.
I'm not going anywhere with that. But my point is we're saving money now where everybody else is making more money from our money than we are. And let's stop that.
Yeah.
You know, if I just stopped paying interest for the vehicles that I drove
right
to a bank and paid it to the insurance company, and eventually I'll get it back as a dividend. That's a whole nother concept. But the concept is I own part of the insurance company now. The reason I use mutual companies is because I don't want stockholders. Why? Because dividends have to go to stockholders. Well, if there are no stockholders, who gets the dividends? Oh, that would be me, policy owners.
Right.
Oh, they paid them for the last 107 years consecutively. They're not guaranteed. So let me, get the legalese out of here. The dividends are not guaranteed, but they've been paid for the last 107 years.
Yeah.
In a row.
Yeah, too big to fail. The government would bail them out if anything happened anyway. So
yeah, I don't think here. So I'm going to
your tax dollars at work, Coach.
So these policies are limited in the amount that you can put in.
Yeah.
Okay.
Yeah. Right.
Because who sets that? It's not the insurance company. It's the IRS.
The IRS.
Okay. Talking about the government. You brought the government into this. So who would set this? The IRS. Why would the IRS care how much money you got in that policy?
Well, it's after tax dollars that you're putting into it, right? So the IRS already got their claws on it. But then, you're growing it essentially, borrowing it back out and making more money where they're going to get their claws on those profits. I don't know. Why is the IRS trying to dig into this?
No, they're not.
IRS.
No, they're not.
No, they're not. Good. Tell me.
No, they're not. Well, as under current tax law, there's another one of those. Loans are not taxable.
Right. Of course, I know that because I refinance my properties to pay myself and investors, and that's the whole name of the game, is to avoid taxes by doing that.
Yep. Yeah. Same thing happens. Now then, they call it, if you cross that line, they call it a modified endowment contract, or MEC, a policy. Now you have tax consequences. And it's not the end of the world, but so how do I get around that? You can own two.
Oh, you can.
How many
could
kids
also-
you got?
I have one child.
There you go. Guess who my next policy is on? I got 5 grandkids. Figure that one
There
out.
you go. Yeah,
Got
there
it?
you go. Okay.
How much does it cost to insure a 14-day-old child?
Probably like hardly anything.
Like 7 cents. Yeah, come on.
Wow. Yeah.
Got it? Now there's some other hoops to jump through and some stipulations. But the bottom line is the guy I learned this from was Nelson Nash. And if you want to Google him, I love him. He's since taken what he called his final graduation and he's left planet Earth. Okay. But he had 49 policies at one time.
Wow.
Look, got it? So every business partner he had,
right,
he got a policy on.
Oh, that makes sense. That makes
Got it?
sense. Yeah.
So now how many warehouses did he have?
And each one of those, I mean, and you could also pile a good amount of cash into each one of these as well. You know, that's one of the best benefits of them. That's why something like the Roth IRA doesn't really compare, because you're capped at $6,000 a year with an IRA. Now you could do the SEP IRA and boom that up to like the mid 40s, but it's still a little tricky to do all that. So this,
if the government really thought that they were going to get you to invest and save taxes, why didn't they just lower the tax rate?
Lower the tax rate, because the government's not your friend, Mr. Peacock. The government is out to get you.
Okay, so Mr. Peacock's my daddy. Don't go there. But it's you're right. So my bottom line is I'm going to get them blind. Do they know you got it? Yes. Could they change it? They could. But the bottom line is most of congressmen own these.
Yeah.
There's a reason I can't bring up Romney. Mitch Romney.
I think, and the insurance companies also, they have such strong lobbying strength.
Bowley, bank-owned life insurance. Go look that one up on your bank's chart. Okay. Bank-owned life insurance. In 2019, 4 banks bought $54 billion worth of insurance. Why would they do that? Guaranteed to grow, can't get to it.
Right.
They've got all the okay, so they got 54 billion. Somebody walks in with $100 million loan, they just loan it themselves. They don't have to go to reinsure. They don't have to go to other banks. They don't have to talk to any of that.
Yeah.
They did it themselves. What's the return on that? It's absurd.
Could be infinite. Could be infinite. So, so my question then, there is some cost to this at the end of the day, because you are paying
absolutely
right for
and you're not going to get around that.
Yeah, administrative fees, things like that. So, I understand maybe 80% of your investment you can kind of borrow back out, depending on where you are in the policy, how much you funded, but the general, generally looking like 68%. Is that right?
Yeah. But and I'm going to tell you that's not my main goal unless you just are killed with student loans. And then I'm going to put you on a real quick, and we're going to move money all that we can. But now that student loan payment doesn't go back to Sally Mae; it comes back to your insurance company. So I'm literally using a Dave Ramsey term here, a snowball, if you will. I mean, I love Dave Ramsey getting from A to B. Okay, I think from B to Z is a nightmare, but that's just my opinion. But I can use that money now to go back into the policy. Okay. Oh, now it's back in the policy. I can do it again.
Right. Okay.
So I'm using that same money to pay off more than one student loan. See the advantage?
Yeah.
And now, and I'm still making the same payment that I was going to make anyway to the student loan company. And that's literally how I started this.
Now, would not to be too personal here, but would say someone your age be able to get a policy like this? Or is there a limit on age where you eventually don't qualify?
Sure.
Someone 40 years old like yourself.
Yeah, thank you. Bless your heart. Yes. I will tell you that I have a policy on an 82-year-old. Okay. And it's a little different story because she did well. Her 401k was massive. Her husband died. It's massive. I mean, she is well taken care of. But now all of a sudden, she has to take required minimum distributions out of her 401k. So she gets this huge check from the 401k administrator, and she doesn't want the money.
Right.
But it's taxable. Okay, so let's pay the taxes on it, and then we'll take that and throw it into a policy. Right. And it goes tax exempt the rest of your life. Now, that money is going to be earmarked for her heirs. She's not going to live off that. She got too much money now. But is that possible? Absolutely. Yeah. Do I have policies? Absolutely. 10. I'll tell you right now.
Right. That's amazing. So even if you're older, you could still get the policy. Like,
absolutely.
Course, there's a health test, everything like that, right?
All of that. It's still insurance. Right. Okay. So there is underwriting. Yeah. But I will also tell you this: the older you get, the less they will sell you. All right. So
yeah.
So trust me, every insurance company knows how many 65-year-olds are going to die today. They just don't know which ones.
Yeah, right? Yeah.
They're very, very good at it.
Right.
So,
all right. Yeah, let's circle back to the 5 steps. I know you were going through them there.
Sure. Well, it's protection, the warehouse, and then I call it deploy money. All right. Our football teams were a lot of, military things. All right. But deploying your money is taking that policy loan and going to do something else with it. So now all of a sudden I have the money working for me in the policy, and I have the money working for me in the asset that I just bought. Now, if you're going to go out there and buy cars and vacations and those types that's not what this is for. Please, there's people out there telling you, hey, you can get rich by buying cars. I'm just telling you, that don't work. All right. And you got sold. All right. Don't do that.
I don't know what YouTube channel you're watching, but that's not what my guys say.
They're not on YouTube. Okay. I promise you, they don't want to be recorded either.
Yeah. Right.
But the truth is, if I can buy an asset where it's going to return me money, I don't care if it's a little, I don't care if it's a lot, I don't care. But I got that same dollar working in both places. Yeah. All right. Now I love it. So, and I've also got the asset. Yeah. Not bad. All right. And then the 5th, that's the 4th is to buy the asset. Yeah. 5th is simply repeat.
Rinse and repeat.
Right? Okay. So let's say I make, I don't know why, I don't even know a good number. So let's say I make $2,000 off of my real estate.
Sure. Okay.
And I'm going to apply whatever your budget says.
Yeah.
And I'm going to take some of that money and pay back to my cash value. Now, truly, it's not. I'm back to the insurance company to pay off my loan. So what did I just do? I freed up that money to buy another house. Because I can use it again or pay off another student loan or to whatever I was going to do anyway. I just want you using the money in a smart manner that you don't think you can go out here and go on vacation and become wealthy. All right. It's not going to, that ain't going to work. But if you'll go buy an asset-based activity, it's something that's going to return you money. I can earn money in my cash value. I can earn money on the asset. All of a sudden, that money's still coming to me every month. Now, all of a sudden, this looks pretty good. The longer it goes, the better it gets. And like I told you earlier, it's not a microwave. Don't think you're going to do this in 1 or 2 years.
Yeah,
right? It's a crock pot. All right.
Yeah, I think any good investment tends to be a crock pot, maturity investment. That's what I say about real estate as well. It's not a get rich quick scheme. Don't wait to buy real estate, as Warren Buffett says, buy real estate and wait. And that is the truth. I mean, the properties I bought, 10 years ago or so is just incredible how my wealth is multiplied in them. And even the properties I bought 4 years ago, but it takes time, and the properties I bought Yeah, a year
So
ago.
that policy becomes more and more and more efficient. The longer you hold it, the more efficient it gets and the more it grows. And you can't stop it from growing.
Yeah.
Yeehaw.
Yeah. No, I love
All
it.
right.
That's the
Now,
name of the game. Something you can't stop from growing.
I got a guy that's got one, and all he does is buy very, very high level antique cars. He is oh my gosh. I'm going, you're paying $250,000 for what?
Yeah.
And then you turn around, you see the car and it's valued at 700. I'm going, okay, I got it.
Yeah. Well, if you know what you're doing in that space, and you can figure that out, sure.
But that's his, I'll borrow another one of my guys' terms. That's his investor DNA. That's what he loves.
Right.
Okay. And I'm just telling your crew to just listen. Invest in what you love. I mean, you already know this. The best investment is you.
Right. Right. Education.
Make yourself better. Your interests, your ideas, your life, your family. That's the best investment. Right. But now that as soon as that's taken care of, let's go find a way to make more money. Yeah. That's exactly where People's Capital Group comes into it.
Yeah. Yeah. No, absolutely.
Exactly. I mean, I told you earlier, I think even before we recorded, this is kind of peanut butter and jelly time. I mean, these go so well together.
Oh, they do. It makes complete sense. In fact, I'm doing a dinner in November for select investors, and I have a life insurance company speaking there briefly about the high value cash life insurance policies, and I'll speak briefly about the apartment building stuff we do. And so it's a really nice marriage. So I mean, it's an extremely interesting thing that I personally am interested in as well. And I wouldn't suggest it to investors if I wasn't personally doing it. Like, I personally invest in our real estate opportunities also, and I personally am looking into this. I think it's a smart financial strategy. But it's a great marriage of what you're offering and what we offer here. Our products really complement each other. And the overall mindset of helping people invest and building their wealth. Having the death policy is huge for legacy wealth. Legacy wealth is something I preach a lot on. And this is all part of building legacy wealth. And but Coach Peacock, I do have to run. Unfortunately, I have a call here I have to jump off to talk to more private investors to help them get qualified to invest in our fund here. That's what I do here at People's Capital Group. But how can people get in touch with you to learn more about what you offer here?
Just do everything through the website. Okay, it's peacockwealthgroup.com. Obviously, no spaces, right? We're all used to that by now. www.peacockwealthgroup.com. And you'll see everything that we're doing there. There's a phone number. There's actually some free books to grab. You want to grab a book and put in writing what we just talked about. But guys, there's maximize your wealth. But be smart about it. And my wealth is different than your wealth, and that's okay. Okay. But the bottom line is, if we can eliminate risk and cost and taxes, now all of a sudden I've got a secure financial future that you never even thought was possible.
No, it's incredible. I love what you're talking about. I love how you help an everyday investor, the everyday person, and you come from a very modest background as well. There, being a high football coach, so really cool stuff. Absolutely. And so go to Doug's website there, check him out, and then once you have a high value cash life, or whatever you want to call it here, this type of policy.
I'm trying to avoid certain words.
Right. I mean,
because I don't want to give you the wrong idea, like it's not an investment.
Yes,
I want to make sure that you understand I'm not licensed to talk about investments.
Right.
So I want to avoid that word.
Of course.
Every chance I get. But the bottom line is, it works. It works faster than I ever thought it would. And I mean, the gratification of getting my former players out of student loan debt is a win. It's a win for everybody. I mean, there's nothing I feel better than doing that.
Great. All right, Coach Peacock, excellent. And of course, to our listeners here, once you have that policy, once it's funded and you're able to borrow back against it, you're looking for good passive real estate investments, go to peoplescapitalgroup.com. We can help you get invested into a quality apartment building there, start earning cash flow and tax depreciation, equity growth upon the refinance. And that's what we focus on here in People's Capital Group, New Jersey apartment buildings, and helping people invest in them to build their wealth long-term. That's legacy wealth for themselves and their families. So a great marriage here on the products. I think both products complement themselves. So check out our websites there. Coach Peacock, thank you so much for coming on here. I'll put your website in the show notes as well.
Thank you.
Yeah, let's definitely keep in touch. Maybe we'll be doing an event in the future together.
Well, I work as a coach. All right. I will coach you through this.
Like it.
And again, don't make it hard.
Don't make it hard. Keep it simple, stupid. Right?
It works best.
It works best.
Thanks,
all right,
Aaron.
my friend. Have a good day. See ya.
Yes, sir.